Hello and welcome. Today I have with me,
Lucas Mortgage.
this is Lucas Hernandez. He is one of my very close mortgage colleagues in the business. We've worked together for a couple years now.
Yeah, we talked about our first client who ironically has the same birthday as Daniela. They celebrated it a
Yes.
couple weeks ago. And I looked back at the closing photo and now it's like, I think it was 2022. And when we
Yeah.
first got connected, time flies.
Yes.
And now
Been a ride
your
since.
family's growing.
Your family better start growing.
So let's make it happen.
I said it. I said it here first.
You heard it here first. Breaking news.
Breaking news. We were talking about the fish, the SpongeBob fish, the breaking news fish. If you know,
If you know, you know.
you know. All right.
So I think we just kind of wanted to talk a little bit on what we see. We're now halfway through the year, right?
Yes.
And 2025 in real estate is, especially in New Jersey, is still strong.
Yeah.
Property values are still high. You still see people bidding above asking price, right?
Definitely. Oh man, you still when you don't expect it, all of a sudden, hey, we had 16 offers.
Oh my God, I know. And it's going back to those buyers that you really build a relationship with. And you're like, oh, this house is perfect for you. And you have to tell them, hey, 18 other people wanted to buy this nice house. It's still a challenge. And you have to be, still competitive. And when you're submitting offers, you have to work with the right team. That's what we have here.
Yeah, and make those offers competitive because a lot of the time it is about the price, but it's more than that for most sellers these days.
What are you seeing as like one of the most common things that make an offer competitive that are separate than price?
Right now, well, I think right now and maybe always, inspection contingency.
Okay.
If you could limit it, waive it ideally, that is really attractive to a seller. Not because they might think there's so many things that are wrong with the home, but it just takes away that uncertain hazard point of the process where, there might be a disagreement on a credit or a repair and you may lose the deal. So knowing that the person is buying the home as it is, as they're seeing it, they could still do an inspection, but it will just be for informational purposes. And that means, okay, inspection is done and there's no other conversation about it, no disagreements, no negotiations. We're just moving on to the next step. So that's a big one for sellers. And appraisal, which of course is a tough one because for 99% of the time you need an appraisal and you don't. It's an art. So an appraiser is just literally, it's based on obviously comps and actual facts, but at the same time the way that an appraiser judges the home and makes their report.
I love the way you said that, because when I explain a lot to first-time home buyers or even investors that are purchasing multiple properties, I have to explain to them an appraiser and an appraiser, all they're doing is they're giving their opinion of the value of the property. Opinion is the strongest word there because everyone's opinion is different. What somebody may think is $500,000, it may be $490 or $550 to other people. So as a mortgage bank, and like you said, Danielle, about 99% of loans are going to require a certified appraisal done by a neutral third party. That does not represent the seller, does not represent the buyer if it's a purchase transaction. They are asserting an opinion of value. And a lot of times sellers want to see that appraisal contingency maybe waived or maybe an appraisal coverage gap.
Yes.
But the buyer has no control over it. Your mortgage bank definitely has no control over it. All we can do is provide comparable sales or comps to the appraiser to hopefully get the value that we need to have a successful and smooth transaction. But at the end of the day, they're a third party that is doing a job, and their opinion of value is what the loan and the purchase price is going to be based off of. So it's hard to explain that to not just the buyer, but also explain it to the seller. I'm sure that you get when you're listing people's homes for sale, you'll get an offer that is probably really attractive because the purchase price is so high. But I'm sure you had to go back to that seller and say, hey, if it doesn't appraise, you may not get all this money.
Yeah.
And that's probably
They have to understand
it's a
that.
difficult conversation.
And eyes light up, you see that higher number, but You know, 20 days from now, we're discussing, okay, where is this gap going to come from? And if it means that the deal is off, and you could have probably taken an offer that was maybe 5, 10K lower, but had that cushion of the appraisal gap or waiving it completely. Can you explain what happens and where the money would come from for that gap in case of a shortfall in the appraisal
Good,
value?
good question. Good question. My opinion, when buyers are submitting offers and they're doing maybe an appraisal gap where they're waiving their ability to have that appraisal contingency, the bank is still going to do an appraisal no matter what, even if a buyer waives their contingency. What happens if there's any shortfall or difference between the appraised value and the purchase price? I explain to the buyer there's a couple of different options, but the most common is that because you agree to waive your appraisal contingency and there's a little bit of a gap, you as the buyer then would have to cover that gap with their own funds.
Out of
So
pocket.
out of pocket. So for example, let's say we are submitting an offer for $500,000, but the appraised value is 490. There's a $10,000 difference there. Buyers would have to come up with an additional $10,000 to give to the seller to sell and meet them whole at 500 because we're only going to give them a loan for that appraised value of 490. So some buyers are under the misconception that okay, that $10,000 goes to down payment, but it doesn't.
Mm, doesn't.
Unfortunately, it doesn't because the loan to value is going to be based off that appraised value of 490. So that $10,000 difference is going to only the seller's pocket, does not go to your equity. It does not help with appreciation. And unfortunately, not every buyer, especially in this economy, has that money to come additionally out of pocket. So it's important to have those conversations early ahead of time as possible. Um,
Yes. So basically, if you allocated 50K towards your down payment and then you have your closing costs, let's assume for this home 15,000. That means you would have to have an extra K laying around in an account that you could include for that contingency.
Correct. Or what we could do, depending on the loan program that you qualify for, and depending, of course, on your debt to income ratio and other qualifications, you mentioned they have 50,000 of down payment. Maybe instead that's 50,000 down payment on the loan. But let's say we take that 50,000 and we only apply 40,000 to the loan, and the additional 10 goes to the seller. So your payment may change, your loan to value may change, but the dollar amount out of your pocket won't change. So it is more flexible when someone is putting down more than the minimum down payment. But if you're a family that is, putting down 3.5%, 5%, some of the minimum loan down payments, it can, eat into that budget and be a very stressful situation.
And mentioning down payment, that's where sellers also look at that, because if a buyer has a higher down payment and they're putting something in like a appraisal contingency waiver or partial, it makes more sense to them that you'll be able to afford in case of a downfall in that appraiser,
Absolutely.
because they're like, okay, if they're putting 25%, they probably have less of an issue putting 20% down in case the home undervalues.
Correct. They're going to look at that a pre-approval letter. They're going to look at the proof of funds. And if
S-
they are overbidding, they understand that the borrower that's putting 20% down can maybe be okay with a five to $10,000 appraisal gap and maybe put, like I said, maybe 18 or 19% down on the loan, and that 1 or 1.5% could go towards the difference. They'll look at that more favorably
Yeah,
typically than a minimum down payment borrower because they assume, okay, they may not have the funds to meet me in the middle
yeah.
or overcome an appraisal gap. So it does affect how sellers are going to view your offer.
And they think, someone with a higher down payment is a safer choice because in case of an emergency or just something happening, they still have a solid amount of down payment,
Yeah.
as opposed to someone putting the minimum down payment. They feel like maybe they won't be able to come up with all the funds needed at the closing table.
Yeah,
But
sellers
I
can do
also
that.
think that they're getting their money, you know?
Whether it's from the bank or
Yes.
whether it's from a higher down
So
payment, they're
at the
going to
end
be
of the
made whole.
day, to completely judge a buyer on a 5% down. It could be strategic as well on the buyer's end. I want to renovate, I want to buy a bunch of furniture, I want to put in a pool, whatever the case may be. I want to hold on to my money and I don't mind paying a higher monthly. So sometimes it's just a strategic reason why they're putting a lower down payment.
I have had people who can have the 20% a 20% down payment potentially in a bank account, and they'll tell me, "Look, it's not. I want to put down the minimum. I would like to finance as much as possible to exactly keep myself liquid, or have money set aside for other things that they want to do with their life. They don't want to tie in all their money into one investment,
When
which is real estate. Maybe want to diversify. So, as a seller, you definitely don't want to look at it as cut and dry as that.
or as a red flag every single time.
It's
No.
not. It could, like you just said, it could be strategic, and maybe the buyer's okay again with the higher down payment because to them what's more valuable is keeping their money in other things and not all tied up in real estate.
And they're approved for the value of the home. Let's say we already crossed the lines of appraisal and all of that. That's the amount they will be getting,
Exactly.
whether it's a 3.5% or a 50% down payment.
Fantastic.
How's the market?
Oh, that's such a broad question, and I always respond with it depends. Are you looking to buy or sell? Especially in New Jersey, sellers are still getting a premium depending on location, size, and condition of their property. But on the buyer side, there is a little bit less competition, a little bit less demand, because the homes are selling at all-time highs. Rates have been inflated for the third straight year. I saw a post earlier saying that since 2022, we've been in a market where the average interest rate falls between 6.5% to 7.5%, which is a lot higher than um, 2018 to 2022, which was that late and early COVID stage of the interest rate market and how it affected real estate.
Which was a phenomenon kind of state
Yeah, that's
because
not the normal. The normal is also not this high. It
yeah,
should be typically somewhere in the middle when it comes to interest rates. But what buyers, you can correct me or you can tell me what your experience is. Buyers are getting a little bit more advantages and maybe getting seller repairs, seller credits, or asking for price reductions, and the sellers are agreeing to it because the sellers are listing their homes at high prices where maybe not everybody A can qualify or B afford, which is more important, the
yeah,
affordability, and willing to negotiate a lot more than they were, a
yeah,
couple of years ago. Now, of course, this is New Jersey specific.
yes.
There are markets all across America that are affected, and your market in Tennessee, Texas is going to be different than right here in New Jersey. But we're lucky here in the Northeast where home values are high. Homes are still appreciating at 4 to 5% every year, and real estate is still a really good investment here.
My
So,
favorite truth about this area, especially within 45 minutes of Manhattan, is all those areas, they're the last to go down when something happens in the
correct.
market, and they're the first to come shooting right back up when things
Wow.
start getting better.
That's so true because we are in probably one of the most desirable areas to live in the country.
Yeah,
Everybody from across the world wants to live, like you just said, 45 minutes
yeah.
from Manhattan.
And with hybrid and all of that, since then, it's even spreading out a little further. So even areas further into New Jersey, further out from Manhattan, they're still getting a lot of equity surplus and value going up because of that. I could commute for an hour and a half once a week,
Yeah,
twice a week, and it's spreading people out a little more and is bringing value to a lot more areas and is causing even more attention and more upgrades to a lot of towns that probably
oh yeah,
weren't thinking they were going to get that way, and now they're like, okay, let's open up some nicer restaurants, more cafes, all of that. But with the interest rate, it's higher than what it was a couple years ago, and I think most buyers are adjusting and understanding that's where we are now.
yeah,
But, there was a point where interest rates for a home were 18%,
yeah, yeah. And those
which
were,
is insane to
yeah,
think about.
it's insane to think about. That was definitely 80s, 90s,
Yes.
and now the home buyer that's coming to the market now, they are fully aware because we have now data for the past couple of years, like where the rates are, it shouldn't be a shock to new buyers. They are actually happy to hear like, wow, thank God they're in the sixes and not the sevens anymore. And I tell them, yeah,
Yeah.
take advantage of this now because a lot of people assumed and were hoping, including myself, that change in government this past November, maybe there would be changes to some financial policy and we'd see rate decreases. Rate decreases are trickling down, but when you see a news article or a newscaster say mortgage rates on the decline for let's say the fifth straight month, most times rates are adjusted by an eighth of a percent.
Yeah.
So I'll get clients telling me, "Oh, Lucas, I heard the rates drop." Yeah, they did, but the difference to your payment is $20. And they're like, "Oh, I thought it would be more." And yeah, but the interest rates do have an effect on people's affordability, but by not that much.
Yeah.
But when you combine high prices with inflated
Yes.
rates, that's when affordability shrinks and it affects people's bottom line.
I also see, as you said, things more wiggle room for buyers now. What I'm seeing is two things. They're either pricing really low to get that higher price,
That could not, yep,
and it's happening a lot. And those are the homes getting, overbid, and you're like, oh my God, they got 50K over ask. But that was actually what the house would have been
was worth.
was worth. Is just that they priced it so low so more of you could come in the door.
Correct. And listing agents do that as a
A
strategy.
strategy.
It's a strategy.
Yeah.
And because now they want to go to their seller and say, "Hey, I have you 30 offers."
Yeah.
But half of them are people who that's the top of their price point.
Yes.
Where people who are higher approved, they're going to drive that price 50, 60, 70,000 over
Yeah.
asking. And again, it discourages some buyers
It
who are in
does.
that price point because they're like, how can I compete? Well, they're actually at a different price point than you. Like you shouldn't be competing, but the way the house is listed, it's to kind of create a
Yeah.
buzz, and
To
it's
see if you could push your limits if you walk in the door and fall in love.
yeah,
And in some cases, some buyers might, but in most cases, they know they can or shouldn't. And then the other ones are the ones pricing really, really high, or like right there where the price of the home should be. And either the house is beautiful and it still gets the attention it wants, or the house is not the best and people kind of let it sit for a while, and then
yeah.
you might be able to negotiate a couple thousand or
Yeah,
so.
and the way that the negotiations work, especially in real estate, a lot of people think it's kind of like a eBay or Facebook Marketplace. Many buyers speak to me, "Oh, how about we offer this number and it's 15, 20,000 or less than even the asking price?" And I'll say, they're not going to bite on that because there's another 10 families that are just like you approved for the same amount and they're willing to give ask. Oh no, let's just see what they say. And sometimes, I'm sure you've done this, you'll, okay, I'll listen to you
Yes.
just so we can show them, hey, this is what the market is. Here's the response I got on your week offer at the end of the day.
Yeah. And then I'll explain to them, and I like to ask, sometimes they don't give you don't get the exact number that they got to, but you say, hey, where did my client's offer rank amongst the 25 offers? And they'll tell you,
You're 23rd.
they'll be like, 24 offers were much higher than yours, kind of
That's
thing.
crazy.
Or some people really, they want I get it. Everyone wants a deal, everyone wants a bang for their buck, but sometimes it's definitely not worth it in this market to offer 50K under 60K. Some people really want to say, the house is listed for 500, but I think we could get it for 400. You're not.
It's unrealistic.
It is unrealistic. And I always say I am the most optimist
Oh,
person.
we have
I
to be. We
love
have to be.
to believe in miracles, and in the best case scenario, of course I do. But sometimes logic has to hold hands with that optimism and make it make sense.
It's got to make sense.
A huge thing that I notice with people who are thinking of buying now or later, they have a misconception of how much down payment is required. So,
Yeah,
Lucas,
100%.
how much down payment is needed to purchase a home? What is better about a higher down payment versus a lower down payment? And what loan types are available for the option for the different down payment options?
There depends on the program. So we'll start off with some of the most common. Some of the most common are FHA conventional and VA loan programs. FHA allows for the minimum down payment of 3.5%. Conventional, the minimum down payment typically is 5%. It could go even lower to 3, but you have to meet certain requirements to get that even lower down payment. And for VA loans, the minimum down payment is 0% actually. So it all depends. I tell buyers, it all depends what's okay with your budget. What what money do you actually have set aside to even purchase a property? What are you okay with putting down? And are you okay with a higher monthly payment? Because when you're putting down less money, you are going to have a higher payment than somebody who's putting down more money because you're borrowing. You're borrowing more money. Your loan amount's going to be higher. So it all depends on how much the borrower has to actually put towards a house, and are they then comfortable with potentially a higher payment because of that. So down payments can vary, but I always tell people the minimum is between 3.5 or 3% to 5%, and the amount you want to put down is really dependent on you and your budget. So it's not always 20%. It's not always 10%, 15%. There are lower down payment options. And then there's even, depending on where you're trying to buy or the amount of income that you earn, there's specialty programs for down payment assistance or first time home buyer programs. They may cap your debt to income ratio, or they may require different credit scores in these other programs. But there are ways to be flexible with down payment. So it's not, hey, if you don't have 10, 15, or 20%, I can't buy a property. You should, definitely speak to you and I so that we can come up with a plan and a solution that best fits your needs. What are you seeing people put down most common?
Depending, if willing and able, most many buyers come in ready with their 20%.
Okay.
And they know or they learn that the reason why 20% is what you hear so often be the down payment amount that you would want to have is because you avoid what's called the PMI,
PMI, yep.
which is the mortgage insurance.
Correct. On conventional loans, yep.
Unconventionals, yes.
So there is also PMI on FHA loans. And if you are putting down more than 10% on FHA loans, the PMI, or the private mortgage insurance, falls off after the 10th year. So, but if you are purchasing a house with a conventional loan and you have 20% down, your payment would be a little bit cheaper because you're putting down 20% and the mortgage insurance comes off the loan as well. So people who are looking for the cheapest monthly payment and have the 20% down, I would probably advise them to do a conventional loan. Obviously, if they qualify, they have the necessary income, credit, and assets to get approved. That would probably be the best solution for them. But in this market, in this economy, some people are opting for lower down payment options because they're okay with the higher payment. But it's, again, to offset and have their money and maybe doing other things and be a little bit liquid instead of having everything tied up in the property.
It's really down to what your goal is and what is important to you. So if low monthly is your goal, put as much down as you can. If you don't care about the monthly, you're like, I have the income, but you know, I just want the house and whatever it is, then we'll focus on getting you what you want and then you figure out that monthly. But you have to qualify.
Of course. What are some of the first couple questions, other than mortgage or financing, that you ask your buyer to kind of get to know them, their likes, their interests, and kind of put them in an area or get an idea? Because I'm sure it's hard, to understand what somebody wants in a property. It's hard to find somebody's fashion sense. I can't imagine what it's like to find what's their home sense. What are they looking for? Like, what are some questions you ask?
Believe it or not, most people, very few people know exactly what they want because you start learning that. We learn it together once we get out there. So we start with the basics. What do you need? Okay, I have a family of X. I need at least 3 bedrooms. Okay, bathrooms. We could do one, preferably two. Okay, so we know where we are there. And then a single family. Are you willing to do a condo, a townhouse? Do you want a multi? And then you focus on what all the plan they have in their mind of what they think they want at that moment. And then some give you like, I need to have
Really?
washer dryer on the second floor. I need this, I need that. And I'm like, I get it. But let's not count all these houses out. Let's check it out because there's always an option. It's something as easy as maybe laundry. Oh, look, this house is so easy to just put it upstairs. You're getting this house for 150 less than your budget, and you could easily just make that like little things like that. So, what I like to do is get the basics. I know the area. Some people know exactly what area they want to be in, some don't. So we go best based on what their priorities are. They say, let me check out the school districts in these areas if they have kids. Or they're like, I don't care. I just need to be at the minimum max 10 minutes from a train. So we know what areas because others don't have that. So we go from there. And then I like to show them usually at least three options within that 3 bedroom, maybe a condo, a townhouse, and a single family. And once we go in and they look around, they start realizing what they want, what they need, what their deal breakers are. And that's when we learn and we bring down that criteria. When they're like, no, you know what? The house is great, but we decided definitely no major road. It's not going to work for us. Like, never. We can't deal with the noise. We come from, the
What are some common deal breakers in that? Like let's say major. Like what are some things that people are like, I do not want to live next to this or live around this?
many, a big deal breaker for a lot of people, especially in counties like Hudson, is parking. Some
Oh,
people are like, I I can't do no parking. They'll see that block. They'll see how long it took us to park to see the house. They're like, yeah, no, there's
they'll
no way.
they'll make the right onto the street and just say nope because
Yeah.
I'm sure in Hudson County some blocks and from Bayonne to Union City to Jersey City, you turn onto them and 90% of the block is two cars and somehow it's a two-way street on
Yeah.
those narrow. It's crowded.
So they start realizing that that's a big one. Some people, they'll start seeing the community and they realize it's not for me. We don't even have to go in the house. Like they'll just the condition of the neighborhood or something like that. They'll realize, it's not what I want. Or a crowded street like that. Like I have a big truck. I can't be going down all these tight one ways,
Yeah.
you know?
I'm assuming, do most buyers actually do they do research into these neighbors? Do they do any drive-bys before they send you a house?
Some do. So let's say they're really eager or they're in the area visiting a friend and they're thinking to move to the area. They'll drive around. They'll see the listings and they'll say, "I drove by the house. Yeah, I want to see it." Or they'll be like, "You know what? That one that I sent you, I don't want to actually see it because I drove by yesterday and the street was too narrow or something like that."
Yes.
So some do, some have no idea what this town is, how it is, anything about it.
Yeah,
It's
I can't
really the
believe
type
that.
of person. You have those type of people that they're very organized and they have their plan and they know more about the town than even if I lived there. More than I know about the town. And some are just going based on how the house looked. And I'm like, this is 2 hours from your
You
job. Are you sure? What do you
do you
mean?
think about that?
Or yeah, it's a lovely home. I'm not denying it. Fully renovated, beautiful, big backyard. But it's out of your budget, or some
Yeah.
people just it's more of the dream they're looking at rather than the practicality of it.
What would you say is the most common thing that people misunderstand about working with a real estate agent?
Some people think that we're just there to let them in a house and that's all we could do, get them a key to access. But there's much more to me than just unlocking doors, I promise.
Yeah, you take photos.
I take TikToks. No. And they just think that you don't know the market, you don't understand the home buying process, you don't understand what's needed, you don't understand what sellers are looking for, how to they think some very few, but some think that you just don't know anything, you just somehow have access to a magic box that lets the key come out and you walk in.
I could not agree more.
And then something that just by meeting them and having a quick chat, that you know exactly what they qualify for, how much, imagine their credit score, and that I should be able to tell them what they need, their down payment, what their rate is going to be at that moment. So they overestimate me, but, and I have to say, listen, I know a lot about it. I've listened to enough of it. I work with lenders every day, but I don't know your specific situation. And the one who's really going to be able to profile that and give you the breakdown is the lender.
Yeah, and I see it as I'll have a phone call conversation with somebody. No, I have no idea about their qualification. I have no documentation to verify, and they'll say, "What can I qualify for?" And I'll be like, "Well, assume I tell them, assuming everything you told me is accurate and I can verify it, roughly this number." "Oh, that's too much," or "Really, I thought more." And I'm like, "Well, how about I see everything?"
Yeah.
Because the pre-approval process is the first logical step for people to go home shopping. They shouldn't be they shouldn't be seeing homes with you, or seriously actively looking to even submit an offer unless they know what they can afford and if it's within their budget. Otherwise, they're doing themselves a disservice because they could end up dissatisfied, or they could be not aware of what they could potentially be
Yeah.
approved for. So
Yeah.
it's really important to have that done.
Some
But
overplay their
oh
approvals and some underplay it.
yeah,
And they don't know that, hey, listen, for your specific situation, for what you're looking for, where you're looking for, what you want, you qualify for this program that will set you ahead in so many ways, and that could qualify you for what you thought you would never be able to step
yeah,
into.
and I think it comes down to working with the right team that has the
Yes.
right communication, because without the right team helping you, it's so hard in this, especially in New Jersey, to close on a transaction. You need to have expert communication between your bank, your agent, your attorney, the title company, your home inspector, home insurance. There's so many people that need to collaborate and get on the same page. And if you have miscommunication or something is miscalculated, it's not just setting you back um, a couple weeks. You could jeopardize the house you want to buy. You could lose out on opportunity, and it's
Waste
so
money,
wait,
waste
not
time,
even waste money and time. Like
and the opportunity, like you
it's
said.
really the missed opportunity because it's so complicated to close right now. And so having the right team to get you there is really important.
Definitely the team is so important, because that's another thing buyers need to understand. We're a team, and sometimes they feel that each individual involved is separate, and that we don't
Nope.
have to communicate or understand where things are with each of us, or that they mistrust bringing us together. Like, I only communicate with the attorney like this about this, and then only with you about this, and no. The more aware we are of where the process is and where we each are with the client's file, with the client's situation, the better outcome we have,
Yeah.
And I tell them, listen, pre approval, like you said, you have to actually approve them and get everything to know what they qualify for. And for me, is I need that from you, because I tell them all the time, hey, we could see the house, but don't fall in love because you're not ready to make an offer. And offers are due in 2 days. So
You need to get
if
yourself
you
together.
want, if you fall in love with this house and you want it, you have to be ready to make that offer. And until you talk to the lender, you're not ready. You know,
And I think that kind of confusion to a buyer, especially someone doing it for the first time, they think we don't talk or that we don't communicate, which is completely false. We're
or
talking.
that we're against them, or just trying to. We literally, if they win, we all win.
Yeah.
But you need to tell us everything. And sometimes I think does this happen with you, where they hide a detail that's very important?
Or
Like,
they'll
they're
say,
hiding the fact that they went to buy a car yesterday, you know?
or I've had situations where people are, you know, I had the money, but something came up and I needed to spend it. All right, can you let me in? Can I be made aware? Because I need to let everybody else know, because everybody is waiting on our clear to close, our appraisal, our underwriting approval. Let me let them know, hey, there's a little bit of a bump in the road. just so that they know what to expect. Because then you have to manage expectations with the seller's attorney and the seller's real estate agent
And the sellers.
and the sellers, because the seller's agent is going to speak to the seller. It's going to
And then you looked like you didn't do your part, but it was something that you had no idea your client did.
it's unfortunate.
And then something happens, maybe that deal falls through, and the client is mad at you, but they never spoke up about that.
And they see it as transactional. They
Yeah.
see it as this person is just to get what I need. And some buyers who see it that way, they have a less enjoyable experience.
Yeah.
Whereas if they are upfront, honest, and kind of communicating with the store every step of the process, home buying's not that bad. It's actually kind of fun.
Yeah.
You see a lot of pretty houses. You meet a
Yeah.
lot of people who can open up connections and opportunities for other aspects of your life, because I definitely know as a real estate professional, I know so many people, from people who can renovate properties to different attorneys to other people that help homeowners and other services. And I'm sure you too, you have
Yeah.
a Rolodex of people
Yes.
that you can refer and connect your clients with. But clients who do not see us as that, they lose
Yes.
out on these
They lose
opportunities
out. They
because they
lose
just
out.
see us as,
They set themselves back. I see that with very few people. You have the clients that they know that I'm doing this every day. I've seen people do renovations, I've seen people paint, I've seen people do all the jobs involved in anything real estate. I'm not going to recommend someone that I think will do a bad job, that's out to get you, that's going to rob from you, that's going to mess an opportunity up for you. Why would I do that when I not only will I ruin things for you, I'll make myself look bad and I'll become untrustworthy. But some people think that that's the goal, and maybe I feel bad if they've been let down by maybe a previous realtor that lied to them, cheated them out of something, forced them into something that wasn't a good thing. But I have their best interest in mind, truly care. And if I recommend someone or if I suggest, hey, I worked with this person, I know their work, I trust them, I know how they do things. It's not because you're paying me $1 million for sharing your number.
no, no.
There's nothing there. There's actually laws against those kind of things. But it's because I know that the stronger your team is, the stronger your offers will be, and the better chances of you finding your home
Yeah, because
fun.
reputation, as many deals as there are in New Jersey, the circle is small.
It's small.
Your reputation matters. Our reputations matter. I'm sure there's certain things you do share on Instagram or Facebook or posts that you would not share or post or whatever if you didn't have your business tied behind it.
Yeah.
Like, our reputation is more important to me. My relationships are more important to me than any one or two transactions,
Yeah. Then getting the deal done
because
and over with.
yeah, because we do this every day. We do this for a living. We do it to support our families. We understand how important it is to, yes, the client who is maybe buying something or moving forward, buying their first property. But it's equally as important to us because we have a reputation to uphold and we're doing the best that we can. And a lot of times, some clients may not see that, but there's been a lot of times where I'm dealing with a difficult transaction with a difficult client because the scenario is super challenging to get approved,
And they think it's your fault
and they think that
sometimes
it's your
when you're
fault, or
actually going above and beyond to
and
make
you're
it happen.
and I go to sleep now comfortably, and it took me years in the business to understand that
Yeah.
feeling, because I know I'm doing my best, and it's not all on me. All I am is a banker trying to get you approved and get you to the finish line so that we could fund the home of your dreams. But
Yeah.
some people, they sometimes take advantage of that kindness or us taking the
Yes.
extra step. So
And that's when they expect so much from you, and
it's because we give them
midnight,
access to
and we give
us.
them access, and
They take
boundaries are
advantage.
definitely important. But at the same time, if it's a time and we're in a crunch and there's a reason why I need to prioritize that client, I will. It's no problem with me. But then some people, they want the world on a silver platter, and then they treat you like you're worthless, like there's nothing to it, or they don't listen to you, and then everything that goes wrong because of the other people they're putting on their team, they blame you, and it, or not blame you, but they lose trust in you, when unfortunately they should lose trust in those people that they found
Exactly.
on Google with the worst reviews.
And I think, especially in this industry, cheap can be very expensive. And I don't mean by cheap in terms of spending. I think cheap with some, even the people you're trusting and the
Yeah.
advice you're trusting. If you're listening to that person who is, maybe even a family member or friend saying, don't do this, don't buy this, or negative on the condition of a property, don't listen to the people who do not do this every day.
Yes.
Trust the opinion of somebody who is not just doing this every day, but doing it successfully, helping families every month.
And they're
Oh,
listening to the uncle that doesn't have a home, never had a home, or
maybe
one time in
purchased 20 years ago.
1993,
Yeah.
yeah, they had a condo that someone kept insisting, "Oh no, don't buy in a building, because one time my sister in the 90s, she bought a condo and the window wasn't working,
Yeah, like something
and it cost
terrible.
her whatever to fix the windows."
Yeah, and now like
Why don't we just look at the windows? How about we do that?
and or when I will have a client that is like, "Lucas, why is this so difficult?" I had a friend that closed and it took them this amount of time and their process was so much more simple. Say, well, everyone, especially when it comes to financing, everybody's money, credit is
Different.
individual. Individual.
No one has to the T exactly the
That's
same file.
that's why I really like what I do is because I never get the same exact scenario or set of circumstances twice. It's literally impossible.
Yeah.
Everybody has different credit, everybody has a different job, everybody has different money in their bank account, everybody has a different family that they're purchasing with, and a different set of circumstances surrounding why they are purchasing a home.
Even the credit score, it could be the same score, but there's different
There's different trade lines.
yeah.
There's different things
Like
on
the
it,
way they
different
came to that
balances.
number is because of different reasons.
Exactly. So I explain to people, hey, whatever prior notion you have, it could have been somebody buying in the same area, buying the same type of house, buying the same price, even qualifying for the same loan. Their set of circumstances are different than yours.
Their
So you
personality,
can't
their
compare.
mindset, their goals,
You
their priorities are different than
Yeah, the
yours.
way the speed in which they are understanding the process, their ability to comprehend everything may be different. Our process of real estate is so complex, and that's why the houses sell for so much. People are not qualifying for 700, $800,000 loans, and it takes 1 week to get it done. I would love it for it to get done. I know you would love for
Yeah.
it to get done, but people understand that
You
there's a
do get
process.
it done fast if need be,
Yeah, we do it,
and they get the file going, so you could.
and I tell
It's not a day.
No, and I tell a lot of sellers or sellers agents that ask me, how quickly can I get it done? I say, listen, I know I can move as fast as possible. I have the team and the support in order to do that. But it truly depends on my client. And I'll explain to my client, hey, we're going to move as fast as you move. Because if you tell me, hey, I can only do this thing every day, or I don't get paid and show you all the money until Friday, or I can't pay for the appraisal till next Sunday. That's okay. I'm going to move by your timeline. But keep in mind, I can't promise speed if the other people and other parties I'm relying on cannot keep that same promise.
Yeah.
So I always set super realistic expectations, especially with the other real estate professionals involved, and most importantly, the client, because we're all on the same team. We want to achieve the same goal, but it all depends on, everybody coming together at the end of the day.
And being on the same page. Same team, same page. Know that, we're all here with one goal, and it's to help you. Yes, there's bad apples in every industry and every business and every job. Not everyone is offers the same value, but as long as everyone's communicating, aware, and also keeping each other accountable.
Mm.
Like, hey, remember we needed to get this document. Oh yes, and then there's it's just all to help you out and to make the process as seamless for you. Ideally for us as well. If we communicate correctly, it makes all of our jobs easier.
What would be one piece of advice that you would give a buyer right now looking to close and own their own home by December? somebody who is waking up today, because there will be somebody today deciding, I want to be a homeowner
in December.
in December or
Before
but
Christmas.
before Christmas. What piece of advice would you give them today, July, to put them in the best position to get done by the end of the year?
Call the lender, look at everything, get all your ducks in a row, get the advice of what they may have for you, of what you need to do in the next month or two to really set yourself up for success. Make sure all your funds, what they are, communicate with the lender, and then start getting an idea of what you want, where you want to be, how much you feel comfortable with spending monthly, and then I say start looking. I could get you on something that's called a collection where we'll put your criteria, your areas, and you could start seeing what's out there. And not only that, let's start seeing how much it's selling for. So you could get an idea of like, okay, if I'm going to look at these houses that were listed for 420, I'm looking to spend on those 420 homes. I'm looking to spend maybe 520 max because that's how much they're going over.
You hit the nail right on the head.
Yeah.
I think that's why we work so well together. Probably, I would suggest a buyer take a week to work with our team to understand your budget, understand your approval, make sure your income, credit, and assets are all straight away, and that over the next couple months, we're anticipating any financial changes.
Yeah.
Job stays the same. Hopefully, credit stays the same. Down payment stays the same.
Knowing what you can do,
No,
so to not
letting
ruin your
and setting
chances.
limitations.
That's
It's
what
like,
you
hey,
talk to the lender because they'll
yeah,
tell you, hey, oh, you're thinking of doing that? Wait until after.
yeah. Because
Oh,
I've
you
had
wanted to buy a car next month?
exactly.
No, don't buy a car next month. Let's get the house. The day you close, go and buy that car.
Yeah, and I'll explain to the client that after we understand your finances, put some effort into understanding location
Yeah.
and figuring out what are your needs. Take a drive by
Yeah.
and then communicate those needs to you. So
Yeah.
then you're looking at specific areas and specific price points.
I'm even willing to go see a home in September and go show you. Let's go one day. Let's see four houses that you think you might like in December, but let's see them now because it most likely won't be available in December. So don't get
Yeah,
caught
but
up in
just
that.
get an idea.
Once you walk in and you realize, oh no, definitely townhouse or single family. I
Yeah.
can't do the condo.
Oh, yeah.
I realize, you know what? I never lived in a condo and I realized this is just not
It's
it.
not for me.
And then we know, perfect. Actually earlier than September. I would say now. Let's go now. So then by beginning of October, you have to really
And now
get a solid idea of the house you
and
want.
we're probably submitting at that
And we're
point
probably
strong
submitting
offers.
strong offers.
So then giving us enough time to
Yeah.
close by then.
Yeah.
So I think that's a fantastic time frame. Some people they think it's overnight and they
Yeah.
try and rush it and then they miss things or they
We're
miss
not going
opportunities.
to look at houses in November to close by December. No. Ideally, we want to get ahead of possible.
You want to leave yourself as much flexibility too when
Yes.
you're submitting a contract because
Yes.
maybe a seller needs a longer
Yeah.
time frame to
Yeah.
close on a property.
That's another
So
one.
you want to give yourself
I
as
say
much-
that too. Let's, especially the homes that are occupied, let's go see those now because they'll probably be more willing to wait till December when you're ready or when you want.
whenever it comes up
Yeah.
because
So
sometimes leases don't always the expiration of a lease doesn't always work with the seller's time frame, so you need to
yeah.
find that perfect match
Yeah.
and it takes time, but again, the right team, the right communication, get it done.
And even let's say you're waiting for December because you have a lease. I say, are you okay with 15 days or a month sooner, which you might actually like more to close November rather than December because you could just slowly move in and
Yeah.
start organizing your new house and just kind of do that transition in a slower way rather than thinking like I want to close the day before my lease is done and then you're rushing to or something happens and it gets delayed. So I'd
Some people
say
try and do that.
be comfortable with shooting for a close date that's a month sooner.
Yeah.
If you're waiting on a lease.
Because your payment doesn't start right away for a mortgage. It gives you time and you can move in slowly instead of move out and move in 2 days or a weekend. You're gonna kill yourself.
Yeah.
It's gonna be too exhausting.
So we could actually get active. Let's say if we want to plan a date, let's get active,
Let's get
August
active.
1st. Let's get active August 1st. Let's prioritize all those occupied homes because those might not be gone by, in 30
Exactly.
days. And then
They kind of need a buyer that has a lot of
and
flexibility.
then when we're getting closer to that date, we already have an idea of what you want, where you want to be, because we already ruled out what you don't want.
And we did all the shopping, the financing, all done ahead of time.
So I have one last question on a personal side, because Lucas, I talked to him about our clients. I asked him about a million mortgage things, but we also chat about life and
Yeah,
personal things.
yeah, we talk all the
And I
time.
know you have an amazing wife,
Yes.
and you guys are so lovely. She makes a really great coffee, and I'll never let her forget it. What is advice for you for newly married couples?
I had this question asked to me by a friend of mine and his girlfriend, and
Mm.
I told him, you want to be together with your best friend. You want to be with somebody you cannot get sick of, that they truly are your best friend, that you can talk to them about anything. You go through the ups, go through the lows of life, and you're happy to spend time with them. So I think my biggest advice for newlywed couples, people looking to get engaged, are going to be marry your best friend. Because if you're not marrying your best friend, it may maybe not. The relationship could be successful. I'm not saying that. I'm just saying it may not be as fun. Marriage won't seem like work. It won't feel like, oh, I got to do this, I got to do that. Sometimes
Because
when you're
that's my wife. Ugh.
yes,
It's
but
like,
when you're
no,
doing it, when you're with
it's my
your
bestie.
yeah, when you're really doing it with your best friend, life can get really easy.
Yeah.
Yeah, because
That's
at the end of the day, you have your best friend.
marry your best friend. If you're thinking, do I want to propose to this girl? Is that your best friend?
Is that your best friend? Can
What would Lucas say? What would Lucas think?
oh,
But that's awesome. And I think that's so true.
it's marry your best
Yeah.
friend.
Yeah.
Everything else will fall in place.
Especially if you have, let's say you have a best friend for years. It's like, isn't that great? You
It's
guys have this
fantastic.
relationship ongoing. You've grown through things, you've seen them in different stages of your life, and you're still best friends. So why wouldn't you want that with the person you're going to spend the rest of your life with,
Yeah,
sleep with, do everything with?
yeah, and of course, that's people think of soulmates or first loves or love at first sight, or I really just think best friend,
Blah. Yeah.
best friend.
Yeah. And I also think people are like, oh, if you love them, I don't know. What I say is, I love everybody.
Okay.
I love everybody. I could have love for a stranger that passed by me and smiled nicely, like sending love your way. Even someone that's like a hot mess of a person, or they're rude. I'm like, you know what? I have love for them. They're having a rough time, whatever it may be. Love is easy. But to have respect, or to have that connection, that friendship, those are the things that I think are greater than love, because love is easy. Yeah.
Yeah, especially love. Love is easy. Love with responsibility, and marriage is responsibility, is hard
Yeah.
because you're gonna have life. Life's gonna be hard because you have responsibilities. But again, if you're going through life with a person that is your best friend and can support you no matter what, you'll have a very
Golden.
happy life.
Yes. Awesome. Thank you for sharing that. So we'll see you soon. Any mortgage questions? Where could they find you, Lucas?
You can find me on Instagram as Lucas underscore mortgage, or you can just Google me, Lucas Mortgage. And you can also now Google me at Lucas the Love Doctor.
.org. I'm
Dot
kidding.
org.
I will tag all his contact info as well in the notes, so that you have that, and you could always, yeah, I'll send you his number. Get through me, whatever. But definitely talk to him if you're thinking about it. Get that conversation going with the lender, because that's the most important part of the buying. And then I'll take it from there.
And
Once you have that pre-approval, I'll take it from there.
kudos to you. When we met in your first year in real estate, I believe.
Yes.
And now you are raising a family. You do this full time. You are a part. Your family's growing. So you became an agent where the market turned upside down. All the work that you've done, when the market turns right side up,
Yes.
you're going to be doing even more. And I know it.
Voila.
Into manifest it,
Yes.
guarantee it. So
And you've done so great too. You're one of the most consistent people I know in your business, and I love to see you grow. I love to see you doing your thing.
could we grow together?
Yeah, grow your girl a baby.